Mealtimes are getting more expensive. Food prices are on the up and they're driving inflation higher.
It's hard times, costs, inflationary costs in the business are ever increasing and you just wonder when will it stop?
Paul Kelly runs a turkey farm in Chelmsford. Higher labour costs are forcing him to put up his prices.
We pride ourselves on the hand plucking and the hand finishing of our turkeys. So by its very nature, it's very labour intensive. So whilst we can be as efficient as we can, we have to accept the fact that we've got to pay whatever the labour charges are at the time.
In the autumn budget, the Chancellor raised employers' national insurance contributions and the national minimum wage. Those costs are now being passed on to us, and the Bank of England has taken notice.
If you had to put a weighting on, how much of this is to do with poor harvests, how much of it is to do with NICS increases?
Very roughly. Well, there's NICS and a few other things going on domestically. It's no more than 50-50, put it that way.
The bank thinks food prices will push the main inflation rate to a peak of 4% in September, before it comes down again. But the bank also cut interest rates by 0.25 percentage point, taking the base rate to 4%. It said rates would gradually come down from there. Inflation above target, but the bank is cutting rates. That seems counterintuitive, yet the committee is getting more and more worried about poor growth and rising joblessness. There are no easy choices here.
The rate cut today wasn't a surprise, but the Bank of England didn't come to this decision quickly or easily. Members of the committee had to vote twice before reaching a consensus, which just highlights how difficult it is to get policy making right in the current economic climate.
I think the vote really reflects what a finely balanced decision it was. The risk around immediate inflation is a little bit higher, but on the other side, we've seen, I think, a little bit more softening in the labour market. So we're having to balance these two things. We've got risks going in both directions.
But the bank can only cut rates so much while inflation lingers on. That means mortgage holders rolling off their fixes will have to wait for deeper savings.
In the past, we fixed for 5 years, we then fixed for another 5 years. I was hoping to do that again, but I'm not sure now. It's great that rates have been cut today. However, moving forward, I think it's still not sure. We're still not sure exactly what's going to happen, and that's quite a scary place to be.
A rate cut today, but the bank left us with very little to celebrate. When it comes to good economic news, it feels a bit like we're picking at scraps. Gurpreet Narwan, Sky News.